What's up, you guys? Video number 5. In this video, I'm going to teach you how you can become a millionaire off of buying Robinhood stock and selling it. Robinhood stock is releasing tomorrow. I released this video just for you guys to help all you guys make millions and millions of dollars off this IPO of Robinhood. So let's get into it. Robinhood is scheduled to hit the markets Thursday in one of the most highly anticipated initial public offerings of the year. The stock trading app will trade on the NASDAQ under ticker HOOD. This is where I don't like Robinhood at all, because they're liars. They will lie to get your money. Robinhood, whose long-standing mission is to democratize investing, is seen as the main gateway to markets for young investors. It wasn't very democratizing when they made so I couldn't buy any more GameStop. I was trying to send that one to the moon and they wouldn't let me buy it. The free trading pioneer has experienced explosive growth in the past few years amid a booming in retail trading. The company estimates its 18 million retail clients and more than 80 billion in customer assets in the first quarter ballooned to 22.5 million users and more than 100 billion in the second quarter of 2021. Robinhood is the third largest brokerage based on the number of funded accounts, behind Fidelity and Charles Schwab, which purchased TD Ameritrade last year. That's insane. Robinhood, an iPhone app, is the third largest brokerage. That is crazy. I remember downloading Robinhood a couple of years ago, thinking this was just going to be some dumb thing that went away. Crazy to see how much it grew. Robinhood went after a largely undeserved demographic in the retail investing space, providing a significant runway for growth according to the autonomous research analyst Christian Bolo. The Menlo Park, California-based app pioneered free trading and forced the brokerage industry to drop commissions in 2019. That's one good thing about Robinhood. They don't have commissions. I think that's the only good thing that came from them, though. Other than the people that were able to make money in the crazes. Robinhood serves the approximately 84 million U.S. households with less than 100,000 in wealth that existing retail brokers have largely ignored. Bolu wrote in a research report, "We size the money app opportunity at about 120 billion in revenues, implying Robinhood has a significant runway for growth." That's kind of scary to think about. Households with less than 100,000 in wealth. Some of those households will not be smart enough to manage stock trading. I'm sure a lot of those didn't get into the stock trading, not because they didn't have somewhere to go, because if they did go into it, then they'd spend all their money on garbage stocks that would lose value. While Robinhood was successful in acquiring clients who were largely left behind by legacy brokerages, their account balances are lower compared with peers, which should give Robinhood a lower valuation according to the MKM partners. Robinhood's IPO pricing implies a roughly 1,350 valuation per active and funded account, based on its estimated 22.5 million accounts as of the second quarter of 2021. This compares with $2,500 per account for E-Trade, which was purchased by Morgan Stanley, and $2,200 per account for each TD Ameritrade account, based on Schwab's purchase price, according to the MKM analysis. Autonomous Research estimates Schwab accounts are worth more than $3,600 per funded account. An unorthodox IPO. Robinhood's long-standing mission is to lower the barrier to entry to the world of finance, and its IPO has been nothing but on brand. The stock trading app is reserving 20% of its 35% of its IPO shares for its own clients, which CEO Vlad Tenev said he expects will be one of the largest retail allocations ever. IPO shares have historically been set aside for Wall Street's institutional investors or high net worth individuals. Retail traders typically don't have a way to buy into newly listed companies until those shares begin trading on an exchange, so they miss out on the pop. Well, actually, what usually happens is the companies have the IPO and then the stock drops 50% and everyone who's in it loses money. That's what happens 95% of the time. So all these retail traders who are going to buy Robinhood stock, they're probably going to lose money. However, some analysts said Robinhood may be leaving itself exposed to the whims of the very amateur investors it's trying to help. There's no doubt that retail traders are much more fickle. The more Robinhood sells to retail, the more susceptible they will be to some sort of Reddit super squeeze type of activity. Greg Martin, managing director and co-owner at Rainmaker Securities, told CNBC this early morning. Robinhood's loose lockup structure is also unconventional. Employees will be able to sell 15% of their shares immediately after the public debut, compared with the traditional 6-month lockup period. After 3 months, investors can sell 15% again. Each time that lockup goes off, the shares' values are going to go down. That's going to make the investors lose money also. Robinhood even had a public virtual roadshow over the weekend, an event historically reserved for investment banks and high net worth individuals. The company's executives invited everyday investors to join the call and spoke on the topics from a poll of 2,000 questions. David Erickson, a finance professor at the University of Pennsylvania's Wharton School, said investment banks typically don't like novelty in the IPO process. However, Robinhood is such a high-profile IPO that it's worth it for the underwriters. Goldman Sachs and JP Morgan are the lead bankers on the deal. Robinhood isn't the latest company to change the structure of public offerings. The traditional IPO is rapidly becoming a thing of the past amid the rise in direct listings and special purpose acquisition companies. I am betting that several of these institutional investors will take a pass, especially at a significant valuation step up from just a few months ago, Erickson said. Robinhood will likely be the 7th IPO of 2021 to raise more than $2 billion. The 6 prior ones are trading below their IPO prices. So like I said before, they come out at a high price, then a month or two after, the price of the stock goes down. So people who buy it initially lose money. Robinhood co-founders Tanev and Baju Bhatt each are planning to sell about $50 million worth of shares in the IPO. Top investors include DST Global, which owns about 9% of Robinhood pre-IPO. Index Ventures has roughly 13%, NEA has about 13%, and Ribbit Capital has approximately 10% of pre-IPO ownership. That's where you know something's up. If Tanev and Baju Bhatt are selling $50 million worth of their own company, doesn't that tell you something could be wrong? Trading slowdown and regulatory risks. Robinhood warned in its updated prospectus that the brokerage could see a slowdown in its epic growth as the retail trading boom cools. We expect our revenue for the 3 months ending September 30th, 2021 to be lower as compared to the 3 months ended June 30th, 2021, as a result of decreased levels of trading activity relative to the record highs in trading activity, particularly in cryptocurrencies, during the 3 months ended June 30th, 2021. An unexpected seasonality, Robinhood said in an amended prospectus released last week. Robinhood, which offers equity, cryptocurrency, and options trading, as well as cash management accounts, benefits from more speculative trading practices from its clients. Options trading makes up about 38% of revenue, while crypto is 17% of revenue, plus margin and stock lending trading levels have been elevated in 2021. Since the lion's share of Robinhood's revenue is derived from transactional activity, there is a risk that a market downturn or even a lot less turnover could lead to top-line pressures. said Peter Hobson, senior analyst at Third Bridge. The last time there was a similar gangbusters retail trading growth was in early 2000, which then saw a material decline in retail trading activity after the pop of the dot-com bubble. Robinhood also said it anticipates the growth of new clients will be lower in the third quarter of 2021 from the second quarter due to the exceptionally strong interest in trading, particularly in cryptocurrencies, we experienced in the 3 months ended June 30th, 2021, and seasonality in overall trading activities, the filing said. It is unclear to us whether the new influx of customers at Hood will continue to be repeat traders or would behave differently from prior cohorts of users. Approximately 60% of funded accounts on Robinhood were opened in the last 12 months, and a vast majority of them are first-time investors, said MKM Partners analyst Rohit Kumlev. Another major risk to Robinhood's valuation would be regulatory changes to the firm's largest revenue source, payment for flow order or the money brokerage firms for directing clients' trades to market makers. Payment for order flow is a controversial practice that has garnered attention from the financial industry, regulatory authority, and Main Street. In the first quarter of 2021, Robinhood found itself in the middle of a firestorm amid an epic short squeeze in GameStop, which was partially fueled by Reddit-driven retail investors. At the height of the so-called meme stock surge, Robinhood restricted trading of certain securities due to the increased capital requirements from clearinghouses. Robinhood raised more than $3.4 billion in a few days to shore up its balance sheet. This was where Robinhood failed. Everyone thought they were for the little guy. And then they stopped us from buying GameStop. And we understood the truth. Robinhood's not for us. We think payment for order flow is a better deal for our customers versus the old commission structure. It allows investors to invest smaller amounts without having to worry about the cost of commissions. However, Warnick said Robinhood wants to be fully engaged in the regulatory and political discussion about PFOF. He said that if the model changed, Robinhood and the industry would be able to adapt. Warren Erickson called Robinhood the most concerning high-profile IPO since WeWork tried to go public a few years ago. The embattled office sharing company pulled its IPO in 2019 after investors balked at public members and disclosures in its prospectus. Robinhood has given no indication that investors have lost their appetite for its IPO, but there are plenty of reasons for concern. In June, Robinhood was slapped with FINRA's largest ever penalty, totaling about $70 million. The company has also faced lawsuits for its multiple days of outages during times when trading volume was heavy during the pandemic. Additionally, Tenev was forced to testify to the House Financial Services Committee in February regarding the GameStop trading mania. Tenev's phone was seized by federal attorneys in investigations about restricted stock trading. Robinhood's governance seems to be tone deaf to these issues, Erickson said. Based on significant issues with both their internal controls and regulators, you would have thought that their own board would be filled with people that have extensive securities, internal control, and regulatory experience to compensate for this, said Erickson, who was formerly the head of the global equity capital markets at Barclays. Unfortunately, that isn't even close to being the case. So what do I think? Don't buy Robinhood right as it gets released into the public. If you want to get a good deal, wait a couple of months till you see it go down, then buy it. You're not going to make any money if you buy it right when it comes out. It's just going to go down. It's going to be like Goldman Sachs or JP Morgan. They're going to go up with the market. But right when the IPO happens, the stock is going to go down. If it doesn't go down, then I'm not an expert, so don't sue me and stuff. Just follow your heart, I guess. I don't recommend it, but I'm not an expert, and this is not expert advice. This is my opinion. All right, I hope you enjoyed this video. Don't lose all your money in Robinhood. If you really want your money to be secure, just invest in index funds of the S&P 500. You'll get good return. Bye. I love you so much.